Let's get started. I would like to test the premise with you all of the panel. What do you think? From your experience, is it true that going to market with a fintech minimum viable product, some say it's impossible, but let's just say it is a challenge?
Certainly my opening position on this is, there's no minimum viable product, or I think the part of the mantra, the way I've heard it expressed, is if you're not embarrassed by the product that you're shipping, you're working too hard or you've waited too late. That certainly was not possible for what we were trying to do. This was going to have to work to even be able to prove out the concept, and one of the implications of it not working would be to get a problematic read on customer acceptance, on customer retention, and on the performance of the financials of what we were putting in place.
If you think about it, we were offering alternative investments, like a hedge fund style investment, multi-million-dollar investments at $5,000 minimums, right? So we had a lot of regulatory and legal infrastructure to deal with. So before we even got to technology, that was a huge part. So we spent 6 months with the top law firm just figuring out what would be the right structure that would be easy for us to go with this product to the market. So I think that was a big hurdle. The second big hurdle was we were asking people for thousands of dollars, right? So the number one thing that comes to mind is trust and credibility. And obviously we didn't have. The founders had trust and credibility, but the brand did not. And so I think for the first year, it was very important as we thought about the MVP. We had to create a website that could imbibe that trust and credibility. And the process that had to be flawless, because you did not want to go to the market and somebody's in between the investment process and the site doesn't work, right? Because they're giving you their money. So I think those factors made it extremely hard. I think the technology part for us at that point was slightly simpler because all we were trying to do was create a simple investment flow. And then we had the luxury to do some of the stuff back end. It didn't have to be fully automated because there was no real-time trading or any of that happening. It was more of a private equity style deal. So I think that was the easier part. But I think trust and credibility and like the legal and regulatory aspect played a key role for us.
Why doesn't it work with fintech if it works with other industries? Well, you got my money. Let's talk about that for a little bit. Marla, when we talked about this a couple of weeks back, I think I'm basically just stealing your ideas because that's what moderators do. You said to me, well, Claude, we're engaging with the client's prized possession, money. You need to be, great quote, you need to be credible. People want to know their money is safe.
Yeah, I definitely stand by that, and I certainly believe that the bar is a lot higher when you're dealing with someone's money, and there's essentially zero opportunities to lose a bunch of people's money. Right? If you are building a brand or an unknown, you're starting out, and you run into that kind of hiccup, I would argue that it's almost impossible to recover from that. So that becomes that has to be airtight. There are other parts of it that you might be able to, on the margin, improve over time, et cetera, but not being able to make someone's money available within the time frames that have been committed, the ability to deliver on the promises as it relates to their capital, those are things that are sort of unforgivable. And if you stumble in that regard, I think you are running the risk of not being viable. I think that's very hard to overcome.
At Stash, we have, since day one, we've been investing heavily in our regulatory and compliance team. And it's expensive, but it's important because, there's our brand and the brand values that we have. And one of them is that we're going to be around for a really long time. And from a brand value, I don't want one of our clients opening up a newspaper and reading that Stash got fined because we did something stupid and that we weren't paying attention to a rule. So we've invested in a team that pays attention to everything we're doing. What we found is, in the context of this panel, we constantly are building MVPs. We've been at this for a couple of years now. We have a couple of MVPs running right now. But we have our compliance team is involved in our product decisions so that we can release software to the public, but also feel good about what we're putting out. And at the same time, we invest heavily in security, in platform security and the security of our data so that our customers can access the Stash app at any time and feel safe that their money is safe with us, and it's really important.
As we build our product out, we realized that there was about a 30% drop-off when we asked for social security number. So there's inherently this trust that you have to earn. And then we have drip campaigns, really, that then try to explain to those consumers, and we've brought that number down to only 10%. And it's all by anchoring the consumer about the value that our products deliver. And as we think about building the next iterations of our platforms, it's always around the partnership that we have with the regulators, with our councils, with our vendors, in terms of really protecting data in the most modern form. And we're seeing that usually when you anchor the consumer, that ultimately we have your best interest in mind, and we are doing everything we can to protect not only the sanctity of your data, but the sanctity of your future. We see that consumers generally respond very well to that.
I think it's really interesting to look back a couple of years ago to a paper published by the Clearinghouse, which is an industry association of financial institutions, which I think was responding to folks like yourselves with some alarm. And the Clearinghouse really teed up in stark contrast what at that time the heavily regulated financial services industry had to put up with, adapt to, live within, which was, pick your favorite set of regulatory initials, this really intense regulatory landscape. And they were very alarmed that financial services startups were coming out and potentially were not going to be subject to the same regulatory landscape. And the banks were saying, well, that's not fair. It's not a level playing field. And the startups were saying, of course it's not a level playing field. You guys have all the money, and we're just starting out. So we need to counter the tremendous economic advantage that you have by being nimble and iterative, or creating MVPs to the extent possible. And here, a couple of years later, I think what we see is that the fintech startups are all living in a heavily regulated environment and appear to significant degree, except maybe with respect to those sandbox programs alluded to earlier, to be living within that and tolerating it. I didn't plan this, but it is a field day for lawyers. How do you acquire customers early if your brand is not established as trusted? Dee, I got to make you start that one.
Sure. So again, like I've said before, you have to anchor the customer in how the value your product derives for them is better than what's in the market. I mean, your product has to be good at its core to have that conversation. So when we started, we relied initially on lots of content marketing, lots of performance marketing. Facebook was the ultimate equalizer in terms of just competing with banks. Banks have these massive branches that act as mastheads in communities, but Facebook equalized that, and that's really why a lot of the companies like ours, direct-to-consumer businesses, could overcome not having a branch network to go directly to consumers. So really having a skill set in your company that understands performance marketing, content marketing, and building a brand message is super important.
Okay. Marla, I think I remember you saying near the top of the hour you guys had 100,000 customers like in the first 4 days, or what was? Would you care to answer this
go
one?
that far. So certainly from our perspective, we're serving a customer that has had a lot of bait and switch activity, a lot of bait and switch experiences with problematic credit. And so we really wanted to focus on communicating the value proposition of what you see is what you get, that you have been pre-selected for this offer, meaning if you come through and apply, this is an offer you're actually going to get, and then being able to deliver that customer experience that goes along with it, so that word of mouth would ultimately start to generate a lot of the response. But for us, one of the tools that works really well, that's still very effective, certainly in subprime, is direct mail. So we do a lot of pre-screen work, we run tons of analysis, and we do a lot of work to select the people up front. But in order to reach them, ultimately, we send out lots and lots of direct mail still. And so sometimes I get people that look at me and say, like, well, it's so good to have you join us here from 1996 with your direct mail engine, right? But the fact is, it still works incredibly effectively to be able to allow us to identify people that are most likely to be successful, and allow that customer to get an offer of credit that they can actually trust. So that's been a really effective channel for us.
That's cool.
I think we're at the end unless you guys have something you want to toss on top of that.
I think performance marketing, as Dee said, is critical. I think I had 10 years of ad tech background that really helped. And so I think one thing you have to understand with performance marketing, though, is the channels change. So Facebook could work really well for 3 months, and then it can just drop off. So I think you have to figure out whether you have the right expertise to be able to kind of navigate that complex landscape. So.
Okay.
Yeah, I mean, for us, I agree with everything I've heard. We treat our acquisition team like a data science team. So, and we've been running it like that since the beginning. So we're very data driven. So everything that we do is an experiment, and we learn from the experiment. So very similar to the MVP process. And then, our North Star that we are guided by is our acquisition cost. So we have to keep the economics in line so that we can keep growing. And it's working. We're now opening over 40,000 accounts a week because of the learnings that we've gotten.
Well, nothing screams like success, right? That's impressive. So, panelists, thank you for a fascinating hour and honestly, a lot of inspiration. Thanks again to Empire Startups for this amazing opportunity. Have a great day.
Thank you.